I just want to make sure.
With markets approaching levels we haven't seen since 2020, now is the time to take control of your investments and manage price risk. For over 40 years, advanced trading has guided farmers through unpredictable markets, offering expert insights and proven tools to tackle challenges as they arise. Given the world's economic uncertainty, adding a trusted advisor to your team will help defend what you've worked so hard to build. Advanced trading, securing your future, one decision at a time.
Us today as we recap the USDA report. I'm Nate Durako, joined by Brian Basting and Michael Reginelli. Busy week.
Yeah.
Election report, a little bit of excitement today, I'd say. A lot of numbers to digest. So without any hesitation, let's get into it. We've got a little bit more of a positive board movement today. Beans up just under 5 on the close, corn up 3 or 4 cents, wheat pretty much unchanged, and SRW down a couple cents, HRW and spring wheat. So, Mr. Reginelli, what do we see in the corn report today?
It's a strange day. I think based on the big thing that got everybody's attention off the cuff was yield. Certainly more beans than corn, but talking about the corn balance sheet, they shaved 0.6 of a bushel off the corn yield. I think based on the dryness in August and September, probably the same story on beans here. You can justify it. Boots on the ground, hearing from clients out there, felt like that last maybe quarter to third of the corn yield, at least in a lot of areas, maybe underperformed from some of the earlier yields.
Dry crop coming in, maybe not a big surprise on the reduction in the corn yield, but
yeah, not a huge surprise. Though the one thing, few things. One thing I thought was interesting was they took, Illinois was going to be a record that's been well advertised for a long time, still going to be a record. 214 was the prior record. They were at 222. Mm-hmm. So they did take Illinois down 4 to 218, but then right next door in Indiana, they raced it higher by 7 bushels an acre on the state yield, which they were 1 bushel below the previous record. Now Indiana's solidly at a record, and it feels like left hand, right hand. So a little odd, but carryout tightens up on the production side. They didn't touch anything on the demand side of the U.S. balance sheet for corn, which also struck us as odd. Right. You look at the pacings for exports, and I think you can build a pretty strong case that number needs to come up or will come up in future reports. But outside of that, world corn stocks tightened up a little bit, and modestly friendly report, which is kind of the reaction we got from the board.
Yeah, a little bit of the pace we've been seeing over the last couple of weeks with the firmer tone in the board. Let's focus on the export picture here for a minute. So our internal balance sheet, we actually increased our export total this week, 200 million bushel. We jumped to a 2.6. We've got a export pace. So kind of the political Chinese conversation is going to be something that is going to continue over the next couple of months. But without China buying, our unshipped book is at a 30-year high.
Yeah.
And so I feel like it was a pretty uniform anticipation today across the trade industry to see an increase in exports that we didn't see.
Yeah.
So with the pace of sales, obviously some potential to see that number come up here eventually.
Yep.
But some of the world balance sheet changes that we saw today that expected, unexpected, how do we dive into those? What did we see a little bit of, both Brian and Michael, either one here?
The one thing, I'll let Brian go, but the one thing that jumped out to me was Argentina corn exports up another 1 million metric tons. If you want to talk about competition, I think that's one thing that we need to focus on. I don't think they touched Ukraine though, did they?
No.
Yeah, so that's also a little bit glaring because most in the private industry, certainly internally, we've been thinking that there's adjustments needed out of the Black Sea, and the USDA seems to be ignoring that,
right?
You know, despite pretty widespread feedback that those numbers need to be talked about.
The only thing I'd add to Michael's comments there, Nate, is that Brazil's domestic consumption of corn continues to increase. And so what the USDA did today was they reduced the Brazilian corn exports for this current crop year by 2 million tons.
Okay.
And some believe that number still is a bit high compared to what is going to happen in terms of the competition for corn from the domestic sector. So the bottom line is last year we saw that Brazilian export program for corn extend way beyond all the way into early 24, as I recall.
Right.
Just a huge crop, and they were a thorn in the side of the U.S. export program. This year, I don't see that happening. It feels like at some point Brazil's going to have to be much more cautious with their export program. And I think USDA reflected that today. Maybe some more cuts down the road, Nate, in that export forecast and future reports.
Could that be to some degree, Brian, though, because, you know, just in the past year and a half, 2 years, China's finally buying Brazilian corn, and the USDA did take China imports down today too. So I mean, their demand's a little more muted than, you know.
They kind of the summary there from when I look at the world balance sheet, I feel like they're starting to address the Brazil situation. We'd seen domestic basis values stay strong, kind of that increased demand domestically fighting against that exporter to a negative margin. So we've seen over the last couple months. So the reduction there, they reduced the China imports 3 million metric tons. So somewhat of an offset, and China buying pace from anybody in the world has been slow. What maybe they haven't addressed that you noted, Michael, was the Ukraine numbers. We saw the agattache already a week or two ago reduce the export outlook there. So the USDA is still at a 23 million metric ton export number for Ukraine and 26 on production, with it feels like a lot more in the trade leaning sub 20 million metric ton.
Yeah.
They also didn't increase the EU wheat or corn imports, which a lot of the pace of U.S. buying, a lot of the unknown, the assumption Spain.
Just look at Spain.
Yeah, we've seen a lot of the unknown sales been when they become known, been going to Spain. So feel like that's the gray area still. So I feel, I guess I'm going to say, I feel like we're still pretty confident that there's some upside in the U.S. export number.
Totally.
And at the end of the day, with the yield reduction, maybe not a big surprise, but kind of our balance sheet, we're starting to get from that 12, 13% plus stocks to use down closer to that 10, 11 range. And, not in the profession of trying to predict flat price, but I think just a general theme, the crop got put away. It was good in areas, maybe some lower than expected yields in pockets, but overall a big crop. World demand up, our foreign export competition down, and what feels like we might be setting up here for a small continued rally in the market. So as you think about producer marketing and talk about that, we've got a lot of unknowns with what is going to happen when Trump takes office. How do you see a marketing plan for a producer? Funds are about net neutral at this point. I mean, is this okay, close your eyes, we're flipping to a bullish market now, or kind of how do you see the choppiness here and maybe ways to manage that risk over the next couple months?
So few things in this, and I might be going back a little bit, but the export program, the USDA at 2325 at the moment.
Mhm.
You know, you look at outstanding sales at 780 million. We were 520-ish, something like that this time last year. You know, we were on the weeklies 92 million, and we're just continue to pack on to that outstanding sales book. And it's not like the corn market from an export standpoint is going to fully hinge its hat on China performance like beans might when we look
Right.
at, you know, bean
Good point.
cadence. So it's a different dynamic. Now, obviously, you know, more going to the EU. Spain could be up to maybe 3 million metric tons potentially. I think they have the potential for it. I mean, we're seeing more markets come into play here. Mexico is the largest, and so obviously the tariff conversation, you know, has surrounded more China because that's what was so publicized, you know, in 19 and 20 when everything really started kind of, you know, coming up. Even prior to that, Mexico, it's going to be really interesting to see how that goes, because if there's any type of dispute with Mexico, that's what also could turn this thing on its head. Our outstanding
Tourists
book
there,
to Mexico is huge. If there is any type of tariffs that get levied on corn exports to Mexico, and I don't think that we're necessarily heading down that path, but at this point, because of the way the election went, we're in a less predictable go forward, right, than we would have been if it went the other way. So black swans and left hooks, you got to be aware of them.
Could argue that the
yeah.
volatility increases, you know, also to the downside of that.
It could cut either way. You know, if for some reason all of a sudden we levy tariffs on, you know, on Mexico, they're trying to import corn that are on the books. Until that corn crosses the border, those tariffs aren't in play. So we got a huge book on.
Yeah.
Things like that are just things that we have to be aware of. I'm not suggesting that's what happens, but that's where there could be some vulnerability, or maybe even giving the USDA pause in trying to increase their export number. If you look at it on paper, though, most in the private sector are anywhere from 2.4 to 2.6 on U.S. corn exports. We're at the high end of that range, but I don't know that anybody's arguing, at least knowing everything that we know today, that number needs to come down. Now, I didn't answer your question though, so let me work back to it. If you wanted to argue the other side, the other thing I'd say is ethanol margins are stressed and under pressure. If you want to play it the other direction, I don't think we're seeing, you know, plants come offline, but we really got to keep an eye on that the next 30 days as we look at, you know, domestic coverage. A lot of hand-to-mouth activity in the country. High basis, feels tight, coming right off the heels of harvest. I would say from a fund standpoint, you're right in that funds are flat. They were record net short back in July to the tune of 350,000. Today, they're basically net even. The strange thing is we've rallied this market 20 cents in the month of November-ish, right, after today. You know, you got futures floating around. Where did we close today? 430, 435?
430.
Versus the D's. When the funds were short 350, they've covered in 350,000 back in mid-July. D's 24 futures, same contract we're talking about, they were 410 to 415. So, you know, we've covered in a tremendous short and not moved the needle that much. In fact, if you erase the month of November, this 20-cent rally that we just caught on a flyer, we're at the exact same price point we were in mid-July when the funds had the biggest short that we've ever seen them have. And we didn't pop the market up. So there's always this narrative that like short covering can push prices and push futures. That's true at times, but we need to kind of keep in perspective. There's been a massive amount of short covering that's happened in the last 4.5 months, and the board's effectively the same price. So that's one thing to note. From a producer marketing standpoint, it feels like we tightened up the carryout on the production side. There's the potential for some modest additional yield cuts in December, January. Chances are now with harvest pretty much wrapped up, I would be surprised if they took the U.S. yield down in the November report only to take it back up in December and January. I would be pretty surprised if that would happen. So we're probably flat to lower in the next two reports before we get to the January final, I would think, from a yield standpoint.
Yeah.
But then it comes down to watching the demand. So I would say from a marketing standpoint, you can build a case for possibly some additional upside in this market. We're still likely flirting with double digits from a stocks to use standpoint. There's still a lot of questions from a policy standpoint. You know, if we get into any type of trade spats on how that could shift our exports going forward once we get beyond January 20th. We don't know that today. That's all speculative. But I think if you're a producer, I would say you need to have target orders in and at least have orders working against the board. We're seeing big swings.
Yeah.
The last 2-3 days, you're seeing pretty big moves and the high lows. If you look at it, have orders in, and honestly, even with the 20-cent pop, option volatility is still cheap,
Right.
protect downside, because there are arguments to be made that this market could turn lower once we get into winter, spring, and you can optionize it and buy calls for still relatively cheap to maintain upside flexibility and opportunity.
Yeah, I think that's a great point on the option volatility, right? And you gave a great breakdown of kind of really a flat market structure. Yeah, we've seen some ups and downs, but we haven't just taken off in that one direction trend.
Right.
And to me, that's, maybe in the way I think about it, to kind of simplify that price move, what's it take for a fund position to start to build an increasing long? I feel like we're in if we continue to see some rally, it's kind of a demand-led rally, which is
Totally.
a positive, but that's very different than a supply shortage. We
Than a
need to
supply
start to
shrink.
ration demand.
Yeah.
So
It's usually not as aggressive.
right.
Yeah.
Exactly. So, take advantage of these marketing opportunities, especially in areas where I think the crop was good, which we've seen some increased farmer selling. But it also emphasizes, as the balance sheet has tightened, it emphasizes that back end importance of a Brazil crop, of a U.S. crop. So that re-ownership now at, still low volatility, the idea of going out and spending 20, 30 cents to maybe re-own the ability to see upside in spring U.S. planting or South American safrinha growing season, I think has more weight in it alongside of the political situation that anybody's guessed today. So a little bit more of a friendly corn outlook. I think we're looking for continued demand increases, at least in our view, and positive environment as the producers wrap up harvest and start to look at their marketing plans. Shifting over to the beans, maybe now, Brian, kind of run down what we saw today on the USDA report. Maybe a little bit more of a surprise in the bean yield.
Yeah, it was really underscored, Nate, that dry finish of the growing season you guys highlighted a moment ago. USDA took the bean yield down 1.4 bushel per acre nationwide, from 53.1 to 51.7. That's a significant drop for this late in the growing season. And I think it just hit the crop got into that pod fill stage, September, and then you got the double crop beans just didn't maybe perform as well as they could have. Now, I don't say this is still a very strong yield, but it's still down from what it was in October. So they took 120 million bushel off the crop size.
Pretty big
Now,
swing.
what the USDA did was they said, well, we're gonna slice off usage a bit. They took 15 off crush, 25 off exports. So at the end of the day, we're down 80 million bushel from what it was in October, from 550 to 470. And it did give the market a jolt here the first 15 minutes, 30 minutes afterwards, 10, 15
almost up 20
cents higher,
cents there.
almost up 20 cents for briefly. But then the market came back to reality a bit. From this standpoint, Nate, I think we're still looking at a carry out of 470. Yes, it's not 550, but 470, Nate, is still up 37% from what it was last year. 37% from what it was last year. So just remind the viewers, we are not running out of beans. Now, having said that, we're looking at the very beginning of the growing season in Brazil and Argentina. A lot can happen. A lot can happen there. And so we want to maintain flexibility, but can't underscore enough how important it is for a grower to get control of these 2024 bushels. Put a floor underneath these bushels, as you guys did a terrific job a moment ago. Option volatility relatively low for this time of year.
Yeah.
Still take some of that money from the gross revenue on the beans, as it were, invest in a call option, put that floor underneath the market, leave that upside open, and then you can turn your attention then to 25. Who knows what's going to happen in 25? Maybe there'll be some growth worldwide in protein demand, this and that, but we want to maintain control of these 24 bushels. That's the message I want to underscore strong enough. But the bottom line is, Nate, yes, we did see the carryout come down from 550 to 470, but that's still a hefty number in the big scheme of things.
Yeah, the price reaction today was interesting. To your point, a big drop in the production, but still a comfortable level, and we still have that back end weight of 18, 19 million metric ton bigger South American crop projected. And you noted the growing season. I think thinking back to the last WASDE we did, we were still in that kind of slower pace to planting in South America and needing some rains. And that's shifted significantly.
Yes,
They're pretty well caught up or on pace now with planting, and they've been getting some favorable rains. just overall profitability dynamic down there with the stronger dollar and the real has shifted a little bit of that mindset for the South American producer, I think, looking now at better returns on corn and beans, maybe a little less hesitation on trying to get that acre planted. So we've got a long way to go with a still a comfortable bean balance sheet, and probably as big of an unknown on it as any commodity is the bean picture with Trump, China, potential used cooking oil, how tariffs impact that, right? We have some positives that we've seen in the bean market with the soybean oil rally and profitability in the crush. So we can offset some of that unknown export, the what ifs of China, with some domestic use. But I still think at the end of the day, we're looking at a comfortable carry out, and it's hard to just stare in those headwinds of a Brazil production and not feel that there's still some risk. So the same concept on the corn side, that re-ownership, if left hook could be Trump and China sit down and say, all right, we want to just go back to the trade deal and not battle tariffs tit for tat on everything, and we see an increase in U.S. exports, or our domestic usage ramps up. But I would rather own that volatility or own that potential upside than sitting here and saying, okay, that's going to happen. I think that these rallies in the bean prices, given the fundamental picture today, are, in my mind, are something the producer needs to take advantage of.
And your point on soybean oil real quick is an interesting one, because what that doesn't do necessarily is jive with the USDA coming in and taking an axe to crush today, especially given that we've had 4 ribbon cuttings of new plants in the past 3 months.
Yep.
Like, we're adding more capacity from the crush side than we've ever had. And by the way, we've rallied soybean oil, 10 to 12 cents at this point in the past, I don't know, month and a half, 2 months.
On a tear.
You're on a tear. And, margins are solid. And yet, just because they took such an aggressive cut to the yield, it feels to me like they're like, well, we can't just take the carryout down 121 million because that's what we took off production. Let's buffer this a little bit and take exports down, even though we had really good weekly sales yesterday and another host of flashes this morning. It feels like every day you wake up, at 8 a.m. Central and you're getting pushed flashes from the USDA. We're selling beans at a pretty good clip. And, it seems odd to me that's, that's kind of how that panned out. But
yeah, our export pace on beans, good point, has ahead of last year's pace at this point.
In August, we had nothing on the books.
Right.
Now we're well ahead, over 100 million ahead of last year on beans. It's pretty wild.
Yep, good point. Brian, shifting from beans now to wheat, pretty quiet report on wheat from what I took in, but was admittedly more focused on the corn export scenario. That just was hard for me to get past. But did we see much, if anything, stand out on the wheat picture? And maybe what are we looking at from some favorable moisture that we saw across a lot of the wheat belt here in the last week, and kind of our new crop production outlook?
Certainly great to see that central and southern plains get that rain, Nate. Just terrific rainfall across Oklahoma, Kansas, heavy snow in eastern Colorado. So terrific to see that. That certainly helped that 25 crop, to a decent start here. And we certainly were concerned about that. Now we'd like to get a little more moisture for our soft red crop further east here, Nate and Michael. I think would confirm now that we got these corn and bean crops tucked away. We certainly would welcome a nice drink here to get this soft red crop established. But having said that, on your balance sheet, Nate, I think we're looking at smaller crop in Russia. USDA took that down 500,000 tons, but they didn't change their exports from Russia. No changes in Ukraine. They did reduce Argentina 500,000 tons, which is a little bit surprising because they've had some really good rain the last 30 days. So I don't think that number is going to go a lot lower based on the stabilization of the Argentina crop. The surprise, Nate, in my opinion, was they did not change Australia. The attaché is at 28.5. USDA left their number today at 32.
Okay.
I think I would side with the attaché, maybe not all the way down to 28.5, but it certainly feels like 32, maybe on the high side. But somebody's going to find out that number is not quite right in the end. What that's going to affect, Nate, is the second half of the crop year exports from the U.S. east to May. I don't see right now a robust U.S. export program. We got some wild cards, as you guys pointed out a moment ago. There's always wild cards, black swans, whatever you want to say, out there. But today it looks like we're still a residual supplier. Better exports than a year ago, but far from a robust export program. maybe a little bit of a bump if we get this Australia crop to shave down 2 or 3 million tons, but still nothing there that's going to say we're going to have an export-led program. Last year, for example, we had the Chinese come and buy a chunk of soft red. No sign of that today. In fact,
Sure.
USDA lowered the Chinese import forecast from all origins today, 500,000 tons. So it doesn't look like, surprises can happen, but it doesn't look like China is going to come in this year for a sizable quantity of U.S. wheat. So overall, Nate, not a lot there in wheat other than to say that we'll keep an eye on these final harvest results now in Argentina and Australia, see if they confirm the USDA's numbers. And we are seeing some decent export business here. Seasonally, we do see an uptick in export shipments December and January, but I don't see a robust export program from the U.S. And so we'll start focusing on 25 now, and that's looking much brighter, at least out in hard red wheat country.
So kind of a neutral world picture, still some moving parts to that, but here starting to shift more to probably more of the U.S. production outlook, conditions ratings, and moisture for the most part across the winter wheat belt.
That was a $1 million rain, emphasized the $1 million snow/rain for the hard red winter folks going into dormancy here just a few weeks away.
And push them right into it.
Oh yeah, just terrific timing on that. And like I said earlier, we certainly would welcome a little bit of rain here, maybe for the soft red crop going forward. So let's see how that shakes out.
It definitely helped the river levels, as
Yeah.
we talk about the excitement in the export picture. Logistics seem to be flowing a little bit better. We've got some beneficial rains increasing, especially with the strong Gulf pull. So kind of a stars aligning. We got an optimistic export program out of the Gulf, P&W, freight seeming to perform for the most part today. So positives for the producer, and kind of leave it, at that. Feels like we've got a little bit of a support from a demand picture framing up with a lot of volatility in the political situation that, we'll continue to hear and focus on, I think, over the next couple months.
Yeah.
So, well, thanks for joining us. Catch us next month. December 10th, I think, is the next WASDE. You can also catch, I think, daily, 9 a.m. Our Pro Media does kind of a market recap. So we look forward to next time. Thank you.